Imagine never having to worry about which stock to pick or being at the mercy of market swings. Sounds like a dream, right? But what if I told you there are stocks you can own for life? Stocks that aren't just safe, but powerful enough to grow your money consistently. The financial market is full of surprises and not always good ones, but with the right choices, you can shield yourself from losses and still thrive. What Fuel tell you is that investing well isn't about luck or timing the market perfectly. It's about knowing where to put your money and letting it work for you, day after day, year after year. If you're tired of following tips that feel more like gambling, it's time to change the game. In this video, I'll show you the 10 best stocks to own for life, the ones that keep growing, innovating, and dominating their sectors even when the market gets rough. We're not talking about passing fads, but about giants with strong fundamentals, a clear vision of the future, and performance that leaves competitors in the dust. Get ready to discover these companies and how they can turn your investment portfolio into a true growth engine. It's time to play like a pro investor and stop settling for crumbs. Let's dive into these opportunities that could be the key to a financially secure and prosperous life. Ready to take the next step and find out which stocks will stand by your side for the long haul? Stick with me, because what's coming next could change your investing game forever. But first, leave your like and subscribe to this channel to receive our notifications. Investing isn't just about picking random stocks. It's like planting a tree that'll bear fruit for a lifetime. The best investment strategies focus on companies with solid fundamentals and a track record of consistent growth. Think of names like Apple and Microsoft, giants that keep innovating with robust business models. For those just starting, you don't need to be an expert. Just observe the companies that keep growing even in tough times. This long-term vision separates successful investors from mere market adventurers. It's not just about what you invest in, but how you choose your stocks. Companies with high valuations and strong cash flow are the right targets. Imagine it like building a championship team. You wouldn't pick players who shine in just one game, but those who deliver consistently throughout the season. Amazon, for instance, keeps growing by understanding consumer behavior and adapting quickly. The trick is to look beyond the charts and spot who's truly changing the game. When it comes to picking stocks, some companies stand out like shining beacons in a crowded sea. Amazon and Apple are prime examples. These aren't just companies. They're innovators, market leaders, and consistent revenue generators. Their ability to dominate their respective markets makes them top picks for long-term investment. Think about it. Every time you shop online or see someone with an iPhone, you're witnessing the power of these giants. Investing in them is like betting on the winning horse, one that's been trained to outperform year after year. What sets these companies apart is not just their products, but their relentless pursuit of innovation. Apple redefines technology with every new product launch, while Amazon continues to push the boundaries of e-commerce and cloud computing. For the savvy investor, this means putting your money where the future is headed. It's like being ahead of the curve, riding a wave that only keeps getting stronger. And the best part? You don't need to be a tech guru to see the value they bring. Investing in companies like these isn't about chasing trends. It's about buying into proven success stories. It's like having a cheat code in the investing world. You're aligning yourself with companies that have already figured out the game. As these companies continue to evolve, their stocks become more than just financial assets. They're a front row seat to the future. And who wouldn't want a piece of that action? Understanding market dynamics is like having a backstage pass to the world of investing. Companies like Coca-Cola and Apple don't just rely on their brand names. They leverage brand loyalty and cutting-edge technology to stay ahead of the competition. Picture this. Coca-Cola's timeless appeal isn't just about the taste. It's about being a staple in every corner of the world, from family dinners to major sporting events. Apple, on the other hand, keeps its edge by constantly pushing technological boundaries, making its products almost irresistible. But it's not just the big moves that matter. It's the subtle shifts in consumer behavior that can make or break a company's position. For example, Apple's ecosystem of products keeps customers locked in. Once you've got an iPhone, it's hard not to want a MacBook or Apple Watch. Coca-Cola does something similar by creating experiences around its products, from personalized Coke cans to its strong presence in pop culture. This insight into consumer attachment is what keeps these companies relevant year after year. For investors, these insights are gold. It's not just about numbers or market share. It's about understanding why people keep coming back. Knowing how a company adapts to consumer needs and market shifts gives you a leg up when choosing where to invest. So, while others are fixated on stock prices, you're seeing the bigger picture, the strategies, the brand strength, the innovation. And that's what turns good investments into great ones. Investing without managing risk is like driving without a seatbelt. It might feel fine until something goes wrong. A solid approach to risk management starts with diversification. Don't put all your eggs in one basket. Instead, spread your investments across different companies, sectors, and even asset classes. Imagine owning stocks in tech giants like Apple, but also having stakes in stable consumer goods like Procter & Gamble. This way, if one market dips, your entire portfolio doesn't take a nosedive. Another key aspect is knowing which companies to avoid. It's tempting to chase high returns, but companies with shaky financials are like ticking time bombs. Look at companies' balance sheets, debt levels, and overall financial health before jumping in. It's like checking the weather before heading out. You want to avoid the storm, not get caught in it. Understanding which red flags to watch for, like declining revenue or increasing debt, can save you from costly mistakes. Lastly, always maintain a long-term perspective. Short-term market fluctuations can be nerve-wracking, but remember, investing is a marathon, not a sprint. This mindset helps you avoid impulsive decisions driven by fear or hype. Think of legendary investors like Warren Buffett. They focus on long-term value, not day-to-day market noise. By managing risk, you're not just protecting your investments, you're setting yourself up for steady, sustainable growth. Global trends shape the stock market like ocean currents shape the tides. Technological advancements, shifting consumer behaviors, and geopolitical changes all play a role in determining which companies will thrive and which might struggle. For instance, the rise of AI and automation is not just a buzzword. It's transforming industries, pushing companies like Tesla and Nvidia to the forefront. Investing in these trends is like catching a wave before it breaks, positioning yourself ahead of market shifts that others are just starting to notice. Consumer behavior is another powerful trend that influences stocks, especially in tech and consumer sectors. Companies like Apple benefit from our growing dependence on tech, while streaming services like Netflix capitalize on changing entertainment habits. It's not just about what's trending today, but understanding what will shape tomorrow's market. Imagine betting on electric vehicles a decade ago. You'd be riding the wave of Tesla's massive success now. Keeping an eye on these trends gives investors the foresight to make strategic, forward-looking decisions. But trends can be a double-edged sword. What's hot today can cool off tomorrow. That's why it's crucial to differentiate between fleeting fads and lasting shifts. Companies that adapt and innovate, staying in tune with global changes, are often the ones that weather market volatility. So, while others chase the latest buzz, savvy investors focus on enduring trends that drive consistent growth, using these insights to stay ahead of the curve. Investing isn't just about what you know. It's also about avoiding common traps that can derail your success. One of the biggest mistakes investors make is relying too heavily on market speculation. It's easy to get caught up in the hype of a hot stock, but remember, investing should be driven by research, not rumors. Think of it like betting on a sure thing instead of rolling the dice. Instead of chasing trends, focus on companies with a proven track record and sound financials. This way, you're not just gambling, you're strategically positioning yourself for long-term gains. Another key tip is maintaining a long-term perspective. Markets will have ups and downs, that's a given. But the real winners are those who stick to their strategy, even when things get rocky. Picture it like a marathon, not a sprint. It's about pacing yourself and staying in the race, no matter the bumps along the way. Avoid the temptation to panic sell during market dips. Instead, view those moments as opportunities to buy solid stocks at a discount. Lastly, diversify, diversify, diversify. It might sound repetitive, but it's the golden rule for a reason. Spreading your investments across different sectors and asset classes reduces risk and increases your chances of steady growth. It's like having a safety net. If one investment falters, others can keep you afloat. By staying disciplined and avoiding these common pitfalls, you're not just investing. You're building a financial fortress that can withstand market storms. Now that you know the best stocks to own for life, the question is, what are you going to do with this knowledge? Let it pass by or use it to transform your financial future. Remember, investing is a journey, and every choice you make today directly impacts where you'll be tomorrow. Are you ready to stop watching from the sidelines and start taking action? These stocks could become the backbone of your financial independence. Which of these do you already have in your portfolio? Which one surprised you? And more importantly, what's your next move? Don't let fear or procrastination be your biggest enemies. Investing isn't about being perfect. It's about starting, learning, and adjusting along the way. And to keep learning how to make smart decisions in the financial market, don't forget to subscribe to the channel and turn on notifications. That way, you won't miss any videos that can help you take another step toward investment success. So, are you ready to change your life? Now's the time to act. Let's go on this journey together to make your money work harder and better for you. Subscribe, leave a comment with your thoughts on the video, and let's keep this conversation going in the next content.